So Jasmy is up around 2.5% today as the overall market has been seeing some huge volatility. Let's jump into it. Looking at Jasmy right here, 0.01826, up 2.37% today, a $900 million market cap. Could down here have been the bottom? Well, only time will tell, but if we look at the 7-day chart, you can see it has been downhill for the last 7 days. In the monthly, it has also been pretty much downhill, and yearly, we are actually still up almost 400%, so it's not as bad as things seem when you do zoom out. Now, as we know, Jasmy is very tightly connected to Japan, right? And Japan has something that is going on right now called the yen carry trade. Now, this is something to do with Japanese currency, the yen, and it is one of the reasons why the stock market is seeing some turmoil right now. And this is something that you really do need to understand in order to understand what exactly is going on in the market. If you are looking for a place to trade Jasmy right now, there is one exchange that I found so far that I work with, and that is BTCC. Now, this is one of the only exchanges out there that you can actually trade Jasmy on the futures market. So if you do want to make a trade, for example, with Jasmy up to 50x, 1x all the way up to 50x, you can do this over on BTCC, and right now they're giving a 10% deposit bonus for first time deposits. So if you use my link down in the description and you deposit $10,000, you're going to get $1,000 that you guys can trade with, and any profit that you make is yours to keep. You can withdraw it from the exchange. So it's an absolutely awesome opportunity. You can get up to $10,000 doing this, and this exchange has no VPN and no KYC, so you can sign up from absolutely anywhere in the world. Now, with that said, let's learn exactly what the yen carry trade is and how this might affect us.
So as we know, the Fed is about to cut interest rates, and a lot of people are celebrating because of this. But is this really cause for optimism, or could a small rate hike on the other side of the world trigger the next big financial crisis? This is something that I really want you guys to understand. So today we are going to explore why this may be a wrecking ball that literally no one is seeing coming, and how could this upend everything. I want you guys to be fully aware of everything that happens in this market. I came across an article written by Arthur Hayes, who is the CEO of BitMEX. And I really thought it was interesting, and I thought it had a lot of information that you guys are going to want to hear, because it may change your outlook entirely on the next coming months of this market. With that said, if you don't know me already, my name's Connor. Of course, I'm not your financial advisor. I'm just a guy sitting in his room, but I do try and bring you cryptocurrency updates each and every day so you guys can be fully up to date with what is happening in the market. With that said, Arthur Hayes' article takes us on a journey from the slopes of the backcountry skiing to a complex world of centralized banking, comparing the short-term boosts from interest rate cuts to quick sugar highs, and the long-term strategies needed to sustain our economy to real food. So do watch this whole video, as I think you are going to really like some of the concepts that tie into the current global financial dynamics and what that means for the markets. So first of all, in this article, he talks about a skiing analogy. Arthur Hayes kicks things off with this vivid analogy. Imagine you're skiing uphill. Your body needs energy fast, so you snack on sugary treats to keep it going. But to sustain the effort all day, you also need real hearty meals. In financial terms, the sugar represents quick fixes like interest rate cuts, which are immediate and short-lived boosts to the economy. But just like skiing, these quick fixes aren't enough. You also need long-term strategies, or what Arthur calls real food, which in economic terms means expanding central bank balance sheets, essentially printing more money to keep the economy fueled over the long haul. Recently, we had Powell's speech where he hinted at rate cuts and a pivot coming soon. So with that said, the recent pivot by the Federal Reserve and the Bank of England and the European Central Bank towards cutting interest rates mean, according to Arthur Hayes, that these rate cuts are like sugar highs he relied on during his skiing adventures. Quick boosts that get the market excited right after the Fed's announcement, which we saw stocks, gold, and even Bitcoin rise. The idea is simple. When money is cheaper, assets priced in that money should go up. But there is a catch that you need to be aware of: the yen carry trade. This is where things get a little bit tricky. The yen carry trade involves borrowing yen at low interest rates and investing in higher yielding assets elsewhere. If the Fed and other central banks cut rates, the interest rate differential between the yen and these currencies narrow, meaning the yen is stronger. A strong yen could trigger a massive unwind of these trades, leading to a destabilization market reaction that could wipe out the initial gains from the rate cuts. Now let's dig a little bit deeper into the implications of strengthening the yen. The narrowing interest rate differential between the yen and other major currencies could lead to a stronger yen, which might seem insignificant at first. It's like the small rate hike in Arthur's analogy. It could trigger an avalanche in the financial markets. As the yen strengthens, those who have borrowed in yen to invest elsewhere might rush to unwind their positions, leading to a cascade of selling in global markets. Hayes is arguing that this scenario could force the Fed to go beyond just cutting rates. They might have to expand their balance sheet, essentially printing more money to stabilize the market. This is the real food Arthur talks about, the long-term solution needed to counteract the immediate risks of the posed stronger yen. Now, we do have some political influence and economic policy to take a look at. So there are other layers to this story, which are politics. Hayes suggests that the political considerations, especially with the election around the corner, are heavily influencing these rate cuts. Despite strong economic indicators like solid GDP growth, Powell is under immense pressure to cut rates to keep the economy, and by extension, the markets on an upward trajectory. So it's literally within his benefit to push the markets up. Hayes now introduces the concept of the Newtonian political physics, the idea that politicians will do whatever it takes to stay in power. In this case, that means pushing for rate cuts to maintain market buoyancy, even if it's not what the economy really needs. This politically motivated decision-making could have long-term consequences that we'll need to watch very closely. If you have been watching my channel over the last coming months, I have discussed this in depth. I believe what these governmental figures are going to do is simply, for lack of a better term, kick the can down the road. This will lead to economic growth in the short term. It will lead to a lot of people forgetting what is really happening. And it will also sadly lead to a lot of retail investors being completely wrecked and blindsided. So it's my belief that we do have an opportunity to go into a pretty big move upwards for crypto and the overall stocks world. After that, I think we will come crashing down. So it's very important to be taking profits if we see them. Now, of course, there is no guarantee to these profits, but if they come, I will be telling you directly here on this channel when I'm taking them and over on my Patreon. Now, over on my Patreon, I post early access to my videos. I post my personal trades each and every day, whether that's buying when I see opportunities in the market. Also, I have traders in here who tell you when they are shorting the market or when they are longing the market. And we have a VIP chat here where we talk directly to everyone. So this could be a great place for you guys to learn and grow from each other. Now, with that said, what does this all mean? We've got a sugar high coming from the rate cuts, the looming risk of the yen carry trade unwinding, and the potential need for the Fed to start printing money again to keep the market stable. It's a delicate balance between short-term gains and long-term stability, and the decision made in the coming months could have significant impacts on the global financial markets. So with that said, hopefully you guys understand a little bit more about what Arthur is saying. I will leave a link to his article down there in the description so you guys can check it out for yourselves. If you do want to grab that awesome airdrop from Margex, or you simply want a new exchange to trade on where you can get $10,000 of a deposit bonus, there is a link down there in the description. Remember, you can trade from anywhere in the world because this is a non-KYC or VPN exchange. With that said, I'll see you guys in the next video. Peace.